Turn things over to Ted Leoracos. Give Ted a round of applause. Welcome, Ted.
Thank you, Bob.
Good to have you here.
Thank you, Bob.
Thank you, Ted.
Pleasure to be here. Wow, it's kind of cool. I'm here on the first day that the shutdown has ended. So let me tell you first, we'll start with that. Shutdown has ended. We're going to see a plethora of information that's been all backed up coming out probably later today, tomorrow, and Monday. That's what will drive interest rates. So the question that people have been asking me is, when the shutdown ends, what are rates going to do? And the honest answer is, I don't know, because I got to see the numbers. If I don't see the numbers, I have no way of knowing what's going to happen to rates. Remember, bad news on the economy is good news for interest rates. The early data is that you have stocks down, mortgage-backed securities up. So perhaps that does mean that mortgage rates will trend lower. Space bar.
The big one.
The big one. There we go. Okay, government shutdown. All right, we did that. All right, let's move on to the next one. Okay, the Fannie Mae FICO change. So this is a blessing and a curse. For myself personally and your other lenders that are part of this group, it's a curse because we didn't care. Here's the difference. We have what they call analytic computerized underwriting through Fannie Mae. DU stands for desktop underwrite.
But everybody's got that.
But when somebody inputs a loan and the FICO score was below 620, end of the story. But we would have the opportunity to go to a manual underwrite. I'm going to tell you a true story. 50% down. Debt to income ratios in the single digit. His FICO score was 615. The client came to me from a bank. They couldn't do the loan because they couldn't get the DU. They couldn't get the desktop underwrite because the FICO score was below 620. Well, we went to the underwriter manually and they said, 50% down, are you kidding me? We're making this loan. And if he never pays us, okay, we'll take the property. In other words, there was common sense with manual underwrites. Well, now this is a huge help for the banks and the credit unions because now that doesn't automatically kill a deal when the FICO score is below 620. You can still get a DU, a desktop underwrite. The lesson here is, first off, DU isn't worth the paper it's written on because not getting a DU doesn't mean a guy can't get a loan, and getting a DU doesn't mean he can fulfill those conditions and actually fund. So that's why we do what we do. We run DUs and we then take it to a manual underwriter to confirm what the DU says.
Yeah, we know what DU stands for. We don't know how DUs work.
Yeah, so the Fannie Mae version of DU is now blind to the 620. It can go below 620. Now remember, there's also Freddie Mac. That's called LP. Loan Prosecute. That's the underwriting engine, computerized underwriting engine that Fannie Mae uses. You watch, they're going to do the same thing here because they have to keep up. You can't have Fannie Mae saying, okay, we'll take these common sense loans, and then Freddie Mac says, okay, we won't. So you'll see that happen. Okay, next up.
Not the one above that.
Oh,
Higher.
The 50-year mortgage. Okay, so I have two opinions on this. One opinion is anything that causes borrowers to say, hey, maybe I should buy a house. That's a good thing. That's a good thing. Would I let my kid take a 50-year mortgage? Probably not. It's like renting the house from the bank. And we already have a product called interest only, which is even better than 50-year mortgage, where you don't pay any principal. As a rule of thumb, you have to look at each situation differently. A 50-year mortgage for somebody like me, well, that's hilarious. it's just.
We don't mean to laugh.
No, you trust me.
You got a good 40 years left.
Yeah, at least. Not really, but the point is, if you have somebody right out of college who perhaps doesn't have an earnings record of 2 years, and they just got that entry-level job, 50-year mortgage is better than renting because now you're in the game. You're a homeowner. And I always think anything that creates a homeowner is a good thing. So the message that I would suggest you deliver to your clients is, yeah, 50-year mortgage, it's worth pursuing. And then let the loan officer, give them the pros and cons. Here's an interesting fact. You might say it's a pro, you might say it's a con. But the bottom line is on a $700,000 mortgage loan, if you take a 50-year mortgage versus a 30-year mortgage, you are going to pay $22,000 more in interest for over 10 years. Now remember, the average life of a property ownership is 11 years. So that's why I picked the 10. It's a round number. So you're going to pay $22,000 more in interest. Is that beneficial relative to the write-off you achieve? Yeah, maybe. And if it's the first home and you're going to turn around and go get another one as income rises. So I'm not going to beat up the 50-year fixed mortgage, but I will tell you, Japan did a 100-year mortgage. Let's hope they don't do that. Aleta remembered that. Dandan, I know we have a loan officer assistant who speaks Mandarin. She knows how that worked out. So in Japan, they did a 100-year mortgage that was assumable to family members. So consequently, they imploded their own real estate market because nobody's leaving. Nobody's leaving. They're letting their kids take over the loan. And the rate was so low then that now they're never letting that go. So if the 50-year mortgage comes out with that as a caveat.
That's what I was going to ask you is, you're saying if. Is the 50-year mortgage a theoretical
It's
thing,
theoretical.
Or is it in place?
No. It's proposed. So that was my point of the Japan story, is if they do it like Japan, it will be terrible for us in our industry. Because if it's a loan where a relative can assume it, the bottom line is that won't be quite as good. Now, the difference between Japan and here is here, Gavin Newsom's going to change your taxes when it gets assumed. Where there, your tax base is frozen to the end of time until you sell the property. So hopefully it won't turn out like that. So I wouldn't sleep on the 50-year mortgage because it might be something that causes the phone to ring, but I wouldn't, get too excited because it's not going to fit for everybody. And it is $22,000 more on a $700,000 loan
If it's going to happen,
over 10 years.
Are we 3 months away from it, 6 months away from it, or do you think it's not even going to happen?
I think it'll happen, but I also think that the caveat is that at the same time that it's being proposed, they're also proposing decoupling from Fannie Mae, Freddie Mac. So if Fannie Mae, Freddie Mac goes full public with no government backstop, are they really going to do a 50-year mortgage? And to quote Tommy Corcoran, a loan officer who in Inglewood was standing behind a potted plant when a loan officer was talking about how he can close a loan in 8 days. He's standing behind the plant yelling, "What's the rate?" This is the 50-year mortgage question. What's the rate? If it's the same rate as a 30-year fixed, I might be a big fan. If it's higher, then you will see again why the 40-year mortgage doesn't work. You can get a 40-year mortgage right now. Yeah. Fannie Mae, Freddie Mac, you get them. Why doesn't anybody take them? Because the rate's so much higher that when you look at the analytics, it's like, wait, I'm going to save $12 a month to stretch it out for 10 years? It's about the rate.
Well, it's like 20, 30 years ago, the difference between fixed and adjustable was huge. Now it's marginal.
Very marginal. Yeah. Very marginal.
And wouldn't an adjustable rate mortgage for most people be a better way to go?
Thank you. So we were just talking about a client where he doesn't qualify for a 30-year fixed mortgage. So we basically got him a 30-year loan, rate set for 7 years, 5.5%. Exactly. So yeah, okay, he can sleep with one eye open for 7 years, worrying about what's going to happen. But the bottom line is, I still think that's better than an interest only or a 50-year fixed. We just have to see how it plays out. It's really about the rate and the payment. Because as you know,
why don't you touch on real quick, just so we have a bar to kind of go by. What's FHA VA looking like this week on points and rates, and what's a conventional standard loan looking like?
Assume 1 point.
Assuming 1 point.
VA is 5.75. FHA is 5.875. Conventional is 6.125.
Okay.
So that, and remember, FHA is a lower rate, but you have FHA insurance that kind of wipes that out. Mm-hmm. So you don't really want to go FHA, especially now with the FICO reduction. Usually the FHA is kind of the place we put people with have issues.
Very good. Any other questions for Ted while he's up? Guys, anybody home?
Nothing in the chat.
Nope.
Thanks again. Pleasure. Thanks again.